Precious Amayo as I bring you news from the epicenter, where it happens and when it happens, staying on top of every breaking story, minute by minute, right at the hour when the city gets busy and just before it sleeps. We're live from every angle with objective insight and analysis. TVC News, first with breaking news.
There is always more to a story than the screaming headline. The part of a story that is not told casts a shadow. It's like the part of an object that is not reached by light. On TVC News, I'm able to explore the many angles there are to a story, talking to stakeholders, asking the difficult questions, and digging for facts. I believe the viewers are able to make a better decision if they're well informed and understand not just a part, but the complete story. TVC News, first with breaking news.
Thank you very much for staying with us. Using the gross domestic product as yardstick, the International Monetary Fund has rated Nigeria as the best economy in Africa in its 2020 World Economic Outlook. The IMF also ranked Nigeria as one of the top of the world's 26 top economies with an average GDP of 976 million US dollars. According to the IMF, countries are sorted by nominal GDP estimates from financial and statistical institutions, which are calculated at markets or government official exchange rates. The nominal GDP does not take into account differences in cost of living in the different countries, and the results can vary from one year to another based on the fluctuations in the exchange rates of the country's currency. In a bid to provide solutions to the myriad of challenges facing the country's economy, federal government had put in place several measures to improve the economy by tackling various sectors that has direct impact on the lives of citizens, such as the Economic Recovery Growth Plan, which aims to tackle key challenges to economic development through tackling constraints to growth and leveraging on the power of the private sector. Well, I have joining me via Skype from Ogweke in Abia State to give more insight into the second topic of discuss is the Chief Executive Officer of Cowrie Assets Management Limited, Mr. Johnson Chukwu. Mr. Johnson, thank you very much for your time. It's good to see you.
Thank you, Tolu. Merry Christmas and Happy New Year.
Yeah, so really, I wish you the same. It's good to see you again. Now, I'm going to start this way. Despite all the challenges with Nigeria, like I spoke earlier to Dr. Okengo, and all of the figures we've been seeing, IMF is coming out to say the country still remains one in Africa. How does this come to you? Were you expecting this? Or you thought that we could have even done better?
Totally, I've always known this as a matter of fact, that the Nigerian economy, in terms of nominal value of our GDP, is the biggest economy in Africa. I mean, when we keep saying immediately Nigeria's economy will rebased, then it became the biggest economy in Africa, trumping over South African economy. And the fact that IMF also said that Nigeria's economy, about the 26th largest economy in the world, in nominal value, was not strange to me. These are facts I have always known. But that does not say the whole fact. We also recognize that, like you pointed out, that nominal GDP does not take into cognizance the purchasing power parity of the income or the and then when you look at the purchasing power parity and then you look at per capita income, you realize that though our GDP at $440 billion looks big compared to other African the size of other African economies, but in terms of per capita income, is significantly lower than that of South Africa, that of Egypt, and several other African countries. So on a per capita basis, Nigeria's economy is still very poor. But on a global nominal basis, it is the largest economy in Africa.
Now, because I'm looking at countries like South Africa, they have stable power supply. Angola, they're doing very well in oil and gas. And Nigeria was just able to. Now, let's look at currency issues now. How well? We've known what's been happening with the Naira and the greenback. So what's this thing that's making Nigeria still have this quality?
Well, if you look at what you measure is the summation of all goods and services produced in an economy.
Yes.
That's
during a
what we are
specific period. And
if you sum up what we are producing as a country, it comes at about $440 billion. If that of South Africa is below that, I think South Africa is about $200 billion. But if you look at per capita income, which we have to emphasize because before we start gloating over the fact that we are the biggest economy in Africa, which we've been for more than 15 years, the reality is that When you divide the 440 billion by the population of about 206 million, it pales into something like $1,900 per person. And then when you compare it to other countries in Africa, like South Africa, their per capita income is more than twice the Nigerian per capita income. Egypt is better than Nigeria in terms of per capita income. Angola has a better per capita income than Nigeria. So what matters is what is the distribution if you share this equally per head. After looking at that, you look at what income inequality. On both counts, Nigeria does not measure strongly.
He did. Now, I also saw China and India moving up in this list to second and fifth place, respectively, coming from 6th and 13th in the year 2000. What would you say is responsible for? What are these countries doing differently, China and India?
Let's start with China. We've seen Chinese economy grow at an average of, for more than 20 years, China was growing above 10% year in, year out. I mean, cumulative annual growth was more than 10%. India has been growing above 6% for more than 15 years. And this is the reason why their economies have actually leapfrogged those who were bigger than them. Today, China is the second largest economy in the world, and it's actually projected in the next 10, 20 years that China could actually be bigger than the US economy. India has progressively moved to the 5th position. And India, the way they are growing, they also have the prospect of getting to be number 3 in terms of global GDP, given their growth rate. What you look at, what rate that economy is growing? Before Nigeria became the biggest economy in Africa, our economy was growing about an average of 7.5% for more than 10 years. Today, we are growing negatively. If you look at our average growth rate in the past 5 years, it's still below 2%. I mean, if you cast your mind back to 2016, when the economy contracted by 1.58%, in 2017, it only grew by 0.82%, and then only 1.91% in 2018, and then by the time we got to 2019, it grew by 2.27%. So that will show you, but the population is growing above 3%. And that's why when we talk about the size of the Nigerian GDP, you need to put it in context and recognize the fact that for you to measure how well Nigeria's economy is faring, you need to measure per capita income. And on per capita income, we've been declining. Like I said, our average per capita income is about $1,900 per head, compared to South Africa, that's more than $3,000 per head. So in terms of size, you could say, yes, big at 440 billion. But remember also, when this GDP was debased, $10 billion. So we have also seen a contraction in nominal value of our GDP over the years.
Okay, Mr. Johnson, I'm not looking at this way now. Is there any impact on investors' confidence when figures like this or assessments like this are reeled out from the likes of IMF? Does it really change anything when it has to do with investors' confidence or maybe, increasing investments in Africa's most populous nation?
Like I said earlier, that the information that we are presenting today has been there in the public space. Yeah. It was just reiterated by IMF that the Nigerian economy is the 26th largest economy in the world and largest in Africa. Virtually all investors interested in this country are aware of this. The key thing that will drive investors back to this economy are the policy choices that the government makes. If you look at the third quarter capital importation, you will realize that other investment was actually the largest, followed by foreign direct investment of just $414 million, and then foreign portfolio investment. We've seen portfolio investment that used to be number 1 take number 3 because foreign portfolio investors are trapped here. They want to exit, they can't exit because they can't access FX, so they're not coming in. We saw an improvement in other investments, and then we saw a 414 million inflow from foreign direct investment. But if you look at the size of the Nigerian economy, 440 million, 1.4 billion that came in as foreign portfolio capital importation in third quarter was the tip of the iceberg compared to what's happening in Ghana. The key thing for me is that we must get the policy choices right as to drive investment, not just foreign investment, local investment into the economy. We must have economic policies that will encourage local and foreign investors to invest in this economy and create jobs. That's the only way we can grow this economy. You cast your mind back. During the Jonathan era, the projection of our economy was get to $1 trillion But unfortunately, we have been shrinking, we have been contracting instead of expanding or growing.
Now, I also like to look at this, as we round up this. I like your opinion on this. Yesterday the president just ordered that the central bank should not give monies for importation of food. That's really something that I really like to get your view. How would you react to this? Are we self-sufficient? We get to that point that we can now say, no, CBN is not going to give forex for importation.
Interestingly, when I saw that news headline, I smiled to myself. In the first place, the central bank is supposed to be policy autonomous. The central bank, there is no window for the president to give orders to the central bank on how to manage the monetary policies, to declare that the central bank should not give forex for the importation of any particular commodity. The fiscal authority, which they said the federal government has their own tools. They can use fiscal tools such as outright banning on importation of food items, or imposing high duty rates on such items. But it amounts to overstretching himself for the president to give orders to the central bank governor, because that erodes the autonomy of the central bank, and actually will jar foreign and portfolio and direct investors into create some concerns and doubts in their mind if you are announcing that the president is giving orders to the central bank, because it erodes the policy autonomy of the central bank. I don't think that's what the president wanted to do. Probably the president wants to express his opinion as to the direction of monetary policies, but I do not think the president should give direct orders to the central bank governor on which segments of the economy to disburse effects to. It erodes and it goes against the instant law of the country as it relates to the central bank law.
All right, I still have two questions for you, Mr. Johnson. Now, some are saying that we need to ensure macroeconomic stability, create certainty, rebuild investors' confidence. You've talked about some of these things. What kind of 2021 do you see? Projections have shown that we could see a growth of 1%. Some say, no, it could not be. What kind of 2021 are you projecting? It's a common question at this time. I would like to get a view of you on this very important to discuss.
Okay, let me start from a general perspective. My take is that the economy will come out of recession in 2021.
Wow, that's a good one.
Which quarter? I think most likely the second quarter of 2021. The growth rate will still be in the region of 1 to 2%, which is still below the population growth rate, and it does not lift the needle, doesn't move the needle when you are growing at below your population growth rate, because you're going to continue to see increasing incidence of poverty. But that's by the way. The other thing is that I hope the government will adopt more market-oriented economic policies as to encourage investment into the local economy, so as to stimulate further faster economic growth. Another thing is that I expect that you're going to see a lot more infrastructural investment in 2021, because the political leaders across the country at both the federal and state level will want to create some tombstones they can point to during the election year of 2023, because by the time you get 2022, it will be a lot of political activity to start. And I think this is actually, the coming year is actually the last opportunity that the political leaders have to give us sure their selling points.
Okay, Mr. Johnson, just a minute now. Figures from the trading today is out, and I would like you to speak to it. We have closing positive. All share index is up 0.97%. Top traders for today, we have Boa Cement International, Breweries, Eternal, Sienna, Listen, NEM. Top losers, Flour Mills, UBN, Access Bank, Guinness, and Cadbury. What's your reaction to the performance of the market all the while? We see good figures coming. I think when I read up yesterday that Nigerian market is almost the best, doing very good. How do you react to this, Mr. Johnson?
Well, I think we must be among the best. As yesterday, we had the market appreciation, capital gain, year-to-date gain of about 44.5%. If you add that to 0.9%, we're dealing with something like 46.4%, which will be among the best in the world. Of course, we know what drove this market appreciation. We saw very low interest rates. We saw foreign portfolio investors that were trapped. We saw a shift in investment from fixed income to equity instruments. And then we've seen a recovery of some of the years of losses. So I think the outlook is also that the equity market will remain strong as long as the current policy choices of the monetary authorities remain, where you have depressed interest rates, and then that compels investors to underweight their equities, their portfolios in fixed income, and overweight them in equities.
All right, Mr. Johnson Chukwu, I must really thank you for your time. It's good to see you. He was live with us from Ogweke in Abia State. Thank you very much. I hope to see you in the new year.
Thank you.
Regards. Mr. Johnson Chukwu there, Chief Executive Officer, Carrier Assets Management Limited, always there for us here on Business Nigeria. Moving on now. Asian shares hit a record high today as investors bet on a strong economic recovery next year. As there is little sign, policymakers wind back massive stimulus efforts aimed at staving off coronavirus-fueled downturns. MSCI's gauge of Asia Pacific shares, excluding Japan, rose 0.6% to hit a record high, led by gains in Chinese shares, bringing its gain so far this year to 18.2%. Japan's Nikkei shared an average loss of 0.58% on the last trading day of 2020, after jumping to a 30-year high on Tuesday. For the year, it was up 50.8%. Now, convictions are that global monetary authorities will continue to pump liquidity into the banking system to support the pandemic-stricken economy. Underpinned risk assets, E-money futures for the S&P 500 edged up 0.13%, parrying much of the losses made in the previous day after U.S. Senate Majority Leader Mitch McConnell put off a vote on President Donald Trump's call to boost COVID-19 relief checks. Britain will be able to trade with its European neighbors and keep control of its laws and destiny. That's the latest from the Prime Minister Boris Johnson, just before lawmakers vote on the Brexit deal, engaged at the 11th hour. The accord struck on December 24th preserves Britain's zero tariff and zero quota access to the European Union's 450 million consumers, preventing the chaotic split business had feared. But it does not cover services, which make up 80% of the British economy, and trade in goods will still be hampered by red tape and higher costs. Boeing 737 MAX resumed passenger flights in the United States for the first time on Tuesday after a 20-month safety ban was lifted last month. American Airlines Flight 718 landed at New York's LaGuardia Airport around 1:08 p.m. after departing Miami about 2.5 hours earlier. Now, American and plane maker Boeing have sought to reassure the public over the plane's safety after it was cleared by the U.S. regulators in November to resume flights. The MAX was grounded in March 2019 for 20 months after 2 fatal crashes in 5 months killed 346 people. Well, oil prices on the international market continue to climb on large crude drawn on hopes that United States will expand pandemic aid payments, a move that could spur fuel demand and stimulate economic growth. Brent crude now sells for $51.42 per barrel, recording an increasing price of 0.65%. But for the OPEC basket, crude oil dealers offer $50.78, recording an uptick of 1.32%. Well, that's our show. Thank you very much for watching. I'll see you tomorrow, same time. But until then, stay with TVC News and watch the rest of our programming. Bye for now.